What is going on, investors? The Creative Investor here. I just purchased 100 shares of this penny stock at $1.05. So I have a high level of confidence in this company. I look to add to this position, but keep this in mind throughout this whole video. Nothing is a recommendation in this video, so do your own research. I cannot stress that enough. You guys need to be confident in what you're buying, or you're not going to stick through with it and you're going to lose money. So do your own research, come to your own conclusions. But if you like finance, if you like everything finance like me, this is the channel to be on. So if you get anything useful out this video, give me a sub at the end, a subscribe, and hit the like button now for me. These videos take a long time to make, so I greatly appreciate you guys that did that. So the penny stock I just bought, and you guys can see that right there, I just bought it, is Assertio, ticker symbol ASRT. So Assertio is looking like a long-term hold for me. With a $96 million market cap, I think this penny stock could easily 10x in the next couple months. Now, not all of this is going to be based off of their actual fundamentals, because to 10x a company, it's kind of hard based off of fundamentals, but I think the hype around this company will be enough alone to push it to $1 billion market cap. But I do think this is a long-term hold for me because they are a healthcare company and they are in the pain relieving sector. The pain management industry is growing at a compound annual growth rate of 7.6% per year. Now, by 2022, the sector is going to be worth around $52 billion. Now, this is a big problem facing people today, is how to manage pain without taking opioids. And this company is working to help change that. Now, they are more than a pain management company. It says on their website, we have a robust portfolio of branded prescription neurology, inflammation, and pain medications. The company has grown through business development, including acquisitions, licensing, and mergers. We are looking to leverage our commercial excellence to be partner of choice. We are interested in products across all therapeutic areas, including our current focus. So right here, they're trying to let you know, if you're reading this, that they are currently looking at other ventures with capital. So that is always a good thing to at least see or hear from a company you're investing in. Taking a look at Assertio's drugs that they have in the pipeline and have approved, they have 8 FDA approved drugs right now. And this one, their main one, Cambia, I want to take a bigger look at this one. So I pulled up, you can go straight from the website, go to product website, and then it'll take you to this website. It says, why give Cambia a shot? It says, what is Cambia? Cambia is a prescription medication used to treat migraine attacks in adults. But it says, Cambia can help with migraine pain, nausea, photophobia, I don't know how to say those, I'm going to be honest, sensitivity to light and sensitivity to sound. It says, you go down some of that stuff. It says, Cambia provides rapid relief at 2 hours, 25.1% of patients free of pain versus 10.1% with placebo. It says 40.5% of patients free of light sensitivity versus 27.4% with placebo. It says 94.7% of patients free of nausea versus 52.7% with placebo. And then it says 44.3% of patients free of sound sensitivity versus 27.4% with placebo. So they are not only beating the other medications, but this medication is beating them by quite a bit. And I only invest in companies that I think will be around for over 10 years or longer. And this drug makes me believe the company will be around longer than 10 years. But to really figure that out, we got to jump into some of the fundamentals and the balance sheet, because that's what really matters as well. It doesn't matter how good the drug is if you're not making money on it. So we're going to jump on into that, and let's go. Jumping on over to Webull to look at the balance sheet on ASRT. Now we are looking at the quarterly balance sheets, and from September of 2019, you can see just for cash and cash equivalents, it has been going down. And that is not a good thing to see. That's not a company that is making money. You can tell just from looking at the balance sheet, they're losing quite a bit of money. But I like to take in a different approach to it. I want to see how much assets they have, if meaning they had to liquidate everything. How much assets do they have and how much long-term debt do they have? Because you can't be way over leveraged no matter what company you are. So their total current assets as far as September of 2020 is let's see, total assets $332.80 million. Now if we go and look to the total liabilities, it's $256.85 million. So it's about $45 million difference. So what does that mean? That means to me they are not in immediate risk of bankruptcy. And mind you that I said that they have 34.74 million of cash and cash equivalents, but they did just do a stock offering. So they offered the shares at about 60 cents, I believe, 64 cents, and sold $14 million worth. So they will have basically add this to whatever they did last quarter. So hopefully they have around 40 to 50 million dollars by their next earnings report coming up in March on their balance sheet. That would be good to see. That would definitely be a positive for the company, the stock. Nevertheless though, I want to show you guys an article. This says best penny stocks to buy today. Analyst targets up to 357% on 4 penny stocks. Now, this was January 21st, 2021, and it has Assertio is the second one on the list. It says Brookline Capital is one of the firms covering Assertio right now. When it weighed in on ASRT in 2020, analysts gave it a $3.50 price target and had a buy rating. Unlike Atosa, the penny stock above this one, Assertio has been a bit more sporadic with headlines. Says one of the things that traders have followed, however, is the company's restructuring plans. Since covering this company in December, ASRT stock has climbed from just 34 cents to highs this week of nearly 80 cents. And then it goes on to say, in quotes from the chairman of Assertio, it says, to adopt the current market environment and maximize shareholder value, we are refocusing and substantially reducing our operating footprint, which is expected to result in significant cost savings, explained Arthur Higgins, chairman of Assertio. So that was all the article said about Assertio. So now we're over on Webull again. I want to show you guys the institutional holdings and some of this other stuff that I really like about Webull's platform. 206 institutions own shares in this company, and they combined own 45.12% of the company, and they own 48.38 million shares and 107.22 million shares outstanding. So that is a very good sign. The more the better, I like to say, when it comes to these. So that's a very good sign. I'm liking what I'm seeing there. Now I just want to look at the corporate actions, the insider activity. Now we can see I was actually very surprised about this because you see quite a bit of buying and selling, but it's not like they're dumping shares. They're selling some, buying some between different people too. Like 97,000 shares, 31,000, like large amounts of shares are being actively traded, and just basically people, I think, rebalancing their personal portfolio. So getting rid of some, other people are buying them, but they're not just selling out and dumping on everybody else. Like most of these are actually people buying shares. So that is definitely a good thing. At least I think that's a good thing, guys, because if something was really, really wrong with the company, they would just sell their shares and stop buying them back and buying more back when they do sell shares. The sell to buy ratio is very, very high on there, so they're buying more shares than they're selling. But we're gonna jump on over to Webull and do a little bit of technical analysis because it is pretty damn interesting. We can see right here $1.15 was the last pop level that it had, and then that was in July of 2020. So it's basically been downhill since there, but we are at that level right now. I think we're at $1.14 in after hours right now. Well, it's past after hours now, but when I'm filming this video, that's where we closed. So we are right at that level. If we can literally stay at this level right here at the 115 or go above it, even consolidate out right here, we're gonna be looking at a run on this company. And you could just see the volume, guys. The dang volume is insane. These candles are nutty on a company like this, and it could be all the hype it's getting, but I honestly think this is just the start. And you could see this stock bottomed out at 33 cents. So even at $1.14, it's hard to go wrong with this company. Risk to reward ratio, because if this company does follow through with everything they are talking about, this will be a very good stock to own at these valuations. With a $96 million market cap, and they have 32 million in assets, 285 million in debt. So if they can figure that situation out, then this stock right now at $1.14 is a bargain. And believe me, it's a bargain if I've ever seen one. And looking at ASRT over the years, we can see that they first hit the market in 1997 at around $13 a share. And then it was a rocky road, kind of consolidated, traded downwards for a while. And then in 2015, 2016, they hit $33.74 at the high. And mind you, this whole time, the volume has picked up since 2016, pretty much consistently from where it was prior to then. But you can see just the massive volume compared to any other time in the stock's listing history that is way higher than it's ever been. I think this trend is likely to continue, so I think we're gonna have high buy volume coming in for quite a while now, and I think it's going to bring the stock up gradually, especially with all the inflation theories and everything else. People swapping to penny stocks is another big reasoning for that. So I am very bullish on the stock. I have 100 shares currently. I tried to get 200 more shares, but I was past after hours. This was at like 7:09 and didn't go through clearly because Robinhood doesn't let that. But that is my thesis behind the company. My price target is $3.50, like that analyst said. I think that's a realistic price target for this company, especially if they keep getting good news. So if you guys did get anything useful from this video, give it a like and subscribe, and I appreciate you guys sticking around till the end, and peace out.